Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
Great news. We've got a sponsor. This show is now brought to you by Miles Franklin. And when it comes to protecting your wealth, you know there's nothing better than gold and silver. That's what I'm buying. I hope you're doing the same. And once you make the decision to buy gold and silver, there's no better place than Miles Franklin. Look, they've been in business 22 years. And the reason I'm a customer is because when you buy, they ship. Go to milesfranklin.com or call them at 800-822-8080 to get a free quote. 1490 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. If you've invested in mining stocks, gold and silver in particular, are frustrated by the low multiples they've been awarded and their underperformance, especially compared to the metal, then you need to hear my next guest, who is Jordan Roy-Byrne. He's written an article for Kitco.com addressing this very issue. Jordan, how are you?
I'm doing okay, Carrie. How are you?
Hey, like you, I'm recovering from a cold and a nasty bout of the flu, but it doesn't look like the mining stocks are ever going to recover from their bout of the flu, does it?
Yeah, boy, they if you're looking at the GDX or the HUI, the large caps, they really look terrible technically, to say the least.
Yeah, why is that? I mean, I hate to be a conspiracy theorist, but if you're going to suppress the price of metals, that indirectly forces you to suppress the metal stocks, doesn't it?
I think in some way. I mean, I try and shy away from the conspiracy stuff because overall, the market is always right. And if you look at what's happened, I mean, we've had a great bull market for, now we're in the 12th year or so. And so, if you really look at the long-term trend, I think the conspiracy argument doesn't really make a lot of sense. And, people kind of, if you lose money and you're blaming it on conspiracy, I think it doesn't, at the end of the day, we're all trying to make money and it doesn't help anyone make money. And there's still, maybe you have 1,000 mining stocks and there's still, 20 or 50 that have probably done really, really well in the last year or so. And you just have to dig down and do your due diligence and really find the best of breed companies and ignore the ones that wouldn't rate highly based on a number of factors. But getting back to the issue at hand, I think part of the reason is when you kind of get to this phase in the bull market, you have a stealth phase, wall of worry phase, and then you have the last phase, which is, the end of the last phase is kind of the bubble phase. When you're kind of in the middle wall of worry phase, something I've noticed when I've gone back and I've studied bull markets and equities is in the wall of worry phase, valuations come down. It is a wall of worry phase, and typically towards the end of that phase, valuations come down and they kind of reach a low as far as where they are in the bull market. And it can actually take, even after a bull market has its second big breakout, it could even take 1 to 2 years after that breakout for the valuations to move up. So we could still be a couple years away where we start to see valuations really improve. So the low valuations, that's not so out of whack with what we've seen historically in other bull markets. Now, I think recently why you see the underperformance is, we have to face the facts. The economy is improving. Now, if you don't think the economy is improving well, then just say that corporate profits are improving because that's what drives share prices. So corporate profits are improving. The Fed, obviously we know policy is extremely easy. Everybody knows that, but they're not going to do they're not going to do QE3, at least not now. And so what the market thinks is profits have recovered, the economy is improving, and since the Fed is they're not embarking on a new program, then inflation is not that much of a worry right now. And so therefore, that's why you see the stock market doing well, and you see money moving into more conventional areas, and therefore And because of what I said about Bernanke and inflation, that could be a reason why you see the gold stocks selling off here.
Right. So, yeah, I guess I should put away my tinfoil hat, is what you're saying, then, right?
Yeah, I mean, I'm not trying to disparage your views or anyone who has those views, but again, let me just ask the question: how does that help us make money? Yeah, and I mean, there are, one thing that's interesting is you do see these days where there's huge declines in gold and silver, the huge sudden declines, but at the same time, nobody mentions the days when gold is up like $30 in 20 or 30 minutes. So you can see that action both ways. I mean, who's ever controlling the market, they do. You can see that movement both ways. So I mean, again, not to, I'm not trying to really crush those views, but I mean, I think there's better reasons why these things are happening.
Right. And you also made a point that you think that the index that we have to measure these mining stocks and their performance is inadequate, and you've come up with a couple on your own?
Yes, I have. I mean, I do that for my subscribers because it gives us a better look at what's really going on with the market. And, I mean, just looking at the GDX or the HUI, there's 3 stocks that make up, I think about, I could be wrong if I remember correctly, Newmont, Barrick, and Goldcorp make up about 40%
right.
Of that index. And at the same time, you also have stocks like Agnico Eagle and Kinross, which have just been they've just been a disaster in the last year. I don't know what else you can say. I mean, their share prices have really come down, and that has nothing to do with negative fundamentals for the sector. It has to do with poor performance from the companies. And so, I mean, that's the thing that I'm getting at. You need to have a market index where the companies adequately represent what's really going on in the sector. And what we're seeing in the GDX and the HUI, it's kind of some of these stocks are really polluting what's really going on. And I looked at, I created my own index of about, I just went and tried to find the 10 best performing large stocks, and that's what I posted there in that editorial. And I looked at that chart, and it made me be short-term bearish, and I have kind of been short-term bearish over the past week or so. So not to pat myself on the back here, but I looked at that and I said, well, this GDX looks bad to me. Now I made my own index. This looks bad. This looks like it could fall 10 or 15%. And so, it's just looking at that. It gave me a confirmation of what GDX or the HUI was giving me. And at the same time, I created my own silver index. There is the silver ETF. I think it's SIL. Which it has some interesting stocks in it, but it still has it has many silver stocks in it. Like half of the top 10 holdings are silver stocks that haven't made a new high since 2008. So 2008, the high in silver was $21 an ounce, I believe. Silver goes up to $49 an ounce. Yet some of these companies aren't able to make a new high. I mean, that's just dramatic underperformance. And you really need to see what's going on. You need to have an index of the strongest stocks, because when the strongest stocks start to weaken, I mean, that really tells you what's going on.
Mm-hmm. And I don't know if you caught the story recently about shorting of the ETFs and the fact that, I forget who it was. I think it was Ted Butler sent off a letter to Blackstone, who's the trustee of SLV, and said, hey, you're allowing this stock to be shorted, and there's all these shares that are effectively created that aren't backed by any silver, and you're losing management fees. Is there something wrong with this picture? And it's something interesting that popped into my head is it appropriate for ETFs that supposedly are backed dollar for dollar by underlying holding of metals to be shorted where effectively additional shares get created? So that's something wrong with that?
Well, I did not see that story, but I would have to agree with you. I do think with some of these ETFs, GLD and SLV, especially with silver, there does seem to be some kind of fishy activity going on there. I mean, that's not really my expertise, but I'm not going to say there's no manipulation whatsoever in the market, because obviously there is some manipulation. But I mean, at the end of the day, it comes back to making money. And I did see a couple analysts who were predicting that the market would get slammed. And so you have to give credit to those guys. I mean, that's the kind of analysis you need to focus on, because that helps you make money. I mean, that's what interests me. What can help you make money? And
right.
So, credit those analysts instead of the other ones who just whine about it all the time.
Yeah, I agree with you. There's, if there is manipulation going on, then how do you turn that to your advantage? How do you take that information and really use it to improve your portfolio performance? Because to just go on about it, it's just an exercise in sophistry, and it accomplishes absolutely nothing, and you are none the richer for it. So knowing that there's manipulation, what do you do at that point? Do you discount it? Do you try to factor it in, or you just really look for those companies that are really performing well and that are going to make new highs or on the verge, and you go allocate towards them? That's really the issue.
Well, I think in regards to the companies, if we're talking about precious metals companies, you really have to have a checklist of things you're looking for. I mean, I think they have to be in a good jurisdiction. They have to have, production growth or growth in their resource. And it has to be something that's going to be a mine. And so that's why I like jurisdictions like Quebec, Nevada, Mexico. I mean, those types of places have a strong history of mining, and properties there are far more likely to become mines than other places. And you have to go with management teams that have done it before. And again, there's not a lot of, as far as the percentage, it's a very small percentage. But if you have 1,000 companies on the TSX, I don't know how many are on the TSX Venture, but you have to really go in there and do your research. And I think you can find more than a handful. And I mean, if for me personally, I have normally, I've only focused on 2 or 3 or 4 companies, and when you get down and you really find those best of breed companies, I think you can do extremely well when you focus on only a handful. And so that's really what you have to do. It's difficult, but you really have to drill down and have your criteria and find the best of breed. And when you're looking at producers, I think producers, you can let those run, but when you're looking at the more speculative explorers and developers, those types of companies, you really need to buy them cheap. And after they have a big move, you really need to take profits, because, they're not making any money. So if they make a big move higher, by 3 or 4 times, it's very difficult for those companies to sustain that. Now, as far as the metals, I think you have to look at technicals and sentiment, and you just have to be a contrarian. You have to know that in a lot of breakouts in this sector tend to be false breakouts. And at the same time, a lot of breakdowns tend to be false breakdowns. I mean, gold has bottomed so many times in the last couple of years on the day where it appeared to make a technical breakdown. So, and look, we're seeing a very difficult market here, but I think we're going to see a lot more weakness in the next couple of days and perhaps week. But I think we're within 2 weeks of probably an important bottom. And so I would just tell listeners, just in my humble opinion, that you have to wait for things to get very, very oversold. Look for them to reach an oversold point at an area of strong support in the past, and with negative sentiment, those are the times when you want to buy and take advantage of the manipulation. Because what happens is then when the market, these metals get extremely oversold, it's what I was talking about before. Then the manipulators buy and they ramp the market higher to help themselves. So you want to be on the correct side of that and not panic out.
Yeah, and when you get those stocks that are really oversold, gives you an additional margin of safety to go in there, because it's been beaten up. The way these stocks work. Every year, stock's going to probably double from its low and then go back again. So when you catch them where they've been really beaten up, it's a great opportunity, because they really do follow a very distinct pattern, these mining stocks. So Jordan, hey, thanks for being on here. I know you're a little under the weather. Appreciate you taking time out from your recovery. Hopefully the stocks will recover and the metals shortly. My feeling is they're going to, because until the a bull market continues until it's over, and it doesn't look like it's over yet, does it?
No, I agree with you. And I would just mention, even though the large miners look like they're going to make new lows, I don't think the juniors, I don't think silver is going to make a new low. I don't see the silver stocks making a new low. Looking at GDXJ, the junior ETF, I don't think that's going to make a new low. So that's something to watch for. We could see strong double bottoms in a lot of areas in the sector.
Absolutely. I noticed that trend myself on the charts. It's looking really powerful. And hey, we'll talk to you in a couple of weeks after whatever is going to happen has happened, and we'll get some more insight into it then. All right?
Okay. Hey, Kerry, thanks so much for having me.
Hey, it's always a pleasure, Jordan. Feel well. Have a prosperous couple of weeks ahead.
Yep, thank you. You too.